Okay, so we shall now proceed to financial statement analysis for mutual fund companies. Before going to financial statement analysis, let's have an introductory discussion on what mutual fund companies are, how they work, and the advantages and disadvantages of having an interest in mutual fund companies. Mutual funds. When we talk about mutual funds, this is an investment vehicle made up of pool of monies collected from investors for the purpose of investing in securities, in stocks, bonds, and money markets. Mutual fund, therefore, a mutual fund is a vehicle made up of a pool of monies collected from investors for the purpose of investing in securities, in stocks, bonds, and money markets. To understand how a mutual fund company works, let's look at the following hypothetical balance sheet. So, this is an example of a balance sheet of a mutual fund company. So, savers like us, whether we call them savers or investors, those who would put their money in a mutual fund, would provide the funding needed to the mutual fund by purchasing a share of stock in that mutual fund company. Savers, investors, whatever you call them, whoever would like to save via a mutual fund will have to buy a share of stock in the mutual fund company. The mutual fund company will therefore use the money collected from investors or savers to purchase different securities like stocks in company A, bonds in company X, money markets of different companies, and so on and so forth. Okay? The money will be provided when savers and investors would purchase shares of stock from the mutual fund company. They would provide the money. This is an investment vehicle made up of pool of monies collected from investors for the purpose of investing in stocks, bonds, money market, securities, etc. That is what a mutual fund basically does. Okay? So, when we talk about mutual funds, we call the managers money managers. We call the operators money managers. Who operates a mutual fund company? The money managers. Money managers would take the money from these investors and invest it in these securities on their behalf. We call the collection of these securities a portfolio. The collection of securities that the mutual fund company would invest in, we call it a portfolio. A portfolio is a basket of securities structured and maintained to match investment objectives. I repeat, portfolio is a basket of securities structured and maintained to match an investment objective. Investment objectives may include the following: growth, liquidity, etc. Okay, when the objective is growth, the mutual fund company should look for shares of stock that are expected to grow at a faster rate than the entire economy. Okay, examples would be tech stocks, no? Technology stocks. So tech stocks or technology stocks, these companies tend to be lean in their startup phase. They tend to grow faster, and when they succeed, they mature with a large value. So if the objective is to grow the money of the investors, the mutual fund company will put in shares of stocks of companies which are expected to grow at a faster rate than the entire economy. If the goal is liquidity, wag naman mag-invest sa stocks. The mutual fund company should not invest in stocks, but should invest in money markets. Okay? If the goal is liquidity, dapat doon lang sa mga short-term instruments, commercial papers, time deposits, short-term debt securities. These are relatively safer, and the fluctuation of value is generally more stable than investing in stocks. So again, it depends on the investment objective. If the objective is growth, syempre mag-invest tayo sa mga company na lumalaki ng mabilis or expected na lumaki ng mas mabilis kaysa sa buong ekonomiya natin. Kung liquidity naman yung goal, edi kung liquidity, dapat yung mga short-term debt securities lang, wag naman sa stocks. Shareholder participates proportionately in the gains and losses of the funds. So if the bonds earn interest, the stocks increase in value, the money markets, when they earn interest, those gains will be reflected in the value of the share. The value of the share of a mutual fund company is called a NAV-PS. NAV-PS. Net asset value per share. The stock value of a mutual fund company is called the NAV-PS. Net asset value per share. So when the stock prices go up, the bond prices go up, they will be reflected in the NAV-PS, net asset value per share. If the value of the securities are up, the value of the shares will also go up. Okay, this is a balance sheet, no? Whatever increase in the left side will mean an increase in the right side. So when the value of the shares go up, when interest and dividend income will be given, they will be reflected in the shares NAV-PS, net asset value per share. Okay? Net asset value per share is basically the value of one share of stock. So when we calculate NAV-PS, the value of one share, think of it this way. Market capitalization divided by the number of shares outstanding. When arriving at NAV-PS, the net asset value per share, think of it this way. Market capitalization divided by the number of shares outstanding. Market capitalization is the total equity value. Okay? So example, kung walang liability, asset is equal to equity. We all know the basic accounting equation that asset is equal to liab plus equity. To simplify our illustration, let's assume that there's no liability. Assets is equal to equity in that case. So whenever the assets increase in value, equity will also increase in value. When that happens, the equity value, aka market capitalization, goes up. When the equity value or market capitalization goes up, divide it by the number of shares outstanding, NAV-PS will also go up. Again, NAV-PS, net asset value per share, can be calculated as market capitalization or equity value divided by the number of shares outstanding. The net asset value per share is therefore similar to the stock price, except that this is not for the market to purchase. Okay? May mga ganong klaseng mutual fund. We call them ETFs, exchange traded funds. But the majority of the mutual funds, they cannot be traded in the exchange. But rather, the investors will put their money at that price, take away their money at that price. Think of it that way. Okay? Think of it as the stock price equivalent of a mutual fund share. Now, you have to understand that when we talk about the mutual fund, we talk about both the investment and the company. Mutual fund is both the investments, your share in this company, and the company itself. So the mutual fund is a is an investment, and the company itself. It pertains to either or both of the paper asset, which is the share in that company, and the company itself. That's a mutual fund. What's the reason why investors will rather go to a mutual fund company instead of purchasing the stocks of company A or the bonds in company X directly? Let me repeat the question. What is the likely reason why the investors or savers would go to a mutual fund company, buy the shares here, instead of directly buying it from company A and company X? The stock of company A, the bond of company X, bakit hindi doon dumiretso? The main reason why this happens is because of people who value diversification. For people who value diversification, investing in one company is quite risky. If they do not know what they are doing, they would rather diversify. So example, this person here, he or she has no knowledge about what's the best company to invest in. So anong gagawin niya? Okay, mag-invest na lang sa maraming company kasi wala siyang alam, no? Mas maganda kung may alam ka, edi gamitin mo yung alam mo. Kung wala ka naman talagang alam, just buy a stock in a mutual fund company. Buy shares in the mutual fund company. They're going to invest it in different companies. They're going to invest it in different companies. So what happens is the risk is reduced through diversification. Example, if this mutual fund company will purchase the stocks of company A, B, and C. Bigyan natin ng dagdag dito. Stocks ni company A, ni company B, tsaka company C. Kung nalugi si A, at least meron pang salo. Si company B tsaka si company C, baka naman kumita. Okay? That's what diversification does. Diversification is about reducing risk by investing in different securities rather than investing in one. Okay. Now, the fund manager is the one ultimately in charge of this mutual fund company, should act in the best interest of the shareholder. The fund manager should act in the best interest of the shareholder. The fund manager would act as the investment advisor. So, going to the corporate structure of a mutual fund company, the fund manager would be the highest employee who should therefore keep the best interest of the shareholders or investors in mind and act as the investment advisor. Reporting to the fund manager are the analysts. Okay? There can be a number of analysts depending on the complexity of the mutual fund who would recommend a stock pick. Okay? Alin kaya yung company na magandang investan? Is it company A, company B, or company C? Recommendations by the analyst will be forwarded to the fund manager for approval. So, sino yung namimili? Una, si stock analyst to recommend only. Pero yung mamimili talaga, who would make the final decision? It would be the fund manager. Okay? It will be the fund manager who's going to act, who's going to be responsible for the performance of this fund. Okay? So si analyst is only to recommend a pick. Ang maganda yung value ni A, undervalued siya. Bilhin natin si company A para kung ma-realize ng market yung tunay niyang halaga, biglang tataas yung value niyan. Okay? If you do value investing. Okay. Fund accountants should calculate the NAV PS every day. What's the role of the fund accountants? The role of the fund accountants is the calculation of the net asset value per share. So every day, titingnan yung buong value ng fund, titingnan yung buong value ng fund, tapos divide it by the number of shares outstanding. That's the job of the fund accountants. So this is a daily job, okay? daily ina-update yung NAV-PS except weekends, no? Except Saturday and Sunday. As long as there's trading, fund accountants will have a job to do for that day. Compliance officers and attorneys. Compliance officers and attorneys, they are tasked with the regulatory and legal requirements, ensuring that the mutual fund is complying with existing laws and regulations. There would be compliance officers and attorneys for the mutual funds, for the regulatory and legal requirements. Okay, for the regulatory and legal requirements. Okay, now what are the fees that a mutual fund incurs? Ano yung mga gastusin ng mutual fund? So the expenses of a mutual fund would include the following. A, fees to be paid by the mutual funds. Ongoing annual fees. Ongoing annual fees. This includes the annual operating fees. Kasama na dyan yung sahod ng mga empleyado. Ongoing annual fees. These are the annual operating fees. Advisory management fees, especially the salary of the fund manager. Okay? Isa yan sa mga binabantayan dyan. Yung salary ng manager. Baka mamaya dyan sa mutual fund, yung pera mo ginagamit na lang pambayad sa sahod ng manager. Okay? So, mutual funds, the ongoing annual fees include the annual operating fees. This includes advisory and management fees. They incur every year. They're incurred, of course, every day. They are usually fixed for a year. You can budget it as a fixed cost for a year. Transaction fees, on the other hand, include those that are incurred every time there's a buying and selling of the mutual fund share of stock. Transaction fees are incurred every time there is purchasing and redemption of the mutual fund stock. So yung investor, bibili ng share, magbebenta ng share, meron siyang transaction fees. Kasama dyan yung commissions. If the mutual fund would hire agents to sell the shares, there can be either front-end load or a back-end load. There's either a front-end load. The time that the investor will purchase, kakaltasan niya na ng fees. Okay? Kakaltasan niya na ng fees. So, commissions can come in the form of a front-end load and a back-end load. Front-end load, these are commissions paid when the investor is going to buy, bibili, no? When the investor is going to buy the mutual fund share of stock. So, pwedeng maningil doon, no? Front-end load. Back-end load, naniningil yung agent kapag binebenta na. I-redeem na yung pera. Sabi ni investor, ayoko na. Okay na. Masaya na ako sa kinita ko. Ibebenta ko na yung mutual fund. Saka palang kaltasan ng commission. It's called a back-end load. Okay? So again, what's the difference between the two types of commissions? Front-end load, they are incurred at the time of purchasing the share of stock of the mutual fund. So when the investor will buy a mutual fund stock, kakaltasan siya agad. Front-end load. Back-end load will be incurred when it is already sold. Usually, isa lang sa kanila yung required. Mamimili si investor, front-end or back-end load. Kung meron mang option. Okay? So may mga funds na front-end load lang, may mga funds na back-end load lang. Meron din mga funds na you can freely choose. So back-end load, kapag ibenta mo, saka ka sisingilan ng commission. Now, aside from those commissions to be paid to the agents, there are those commissions that will be incurred by the mutual fund, that will be payable to the mutual fund company other than the agent. So, redemption and purchase fees. So, kapag bibili ng shares, may purchase fees. Kapag ibebenta yung share, merong redemption fees. I'm talking here about the share of the mutual fund company. Okay? Now, for some funds, there's an early withdrawal penalties. So, ayaw ng mga mutual funds na pagbili, benta agad. Okay, hassle sa kanila. So, may mga early withdrawal penalties. Okay, do you have any questions so far? Do you have any questions so far? Meron ba kayong mga tanong? Okay, so kung wala naman kayong tanong, one more item. Okay? One more slide. So, what are the advantages and disadvantages of investing in a mutual fund? One of the advantages of investing in a mutual fund, as I have discussed a while ago, is diversification. Okay? What does it mean when there is diversification? When the performance of one company is not good, at least there are other companies who are expected to do good, will do good. So mutual fund companies would scatter. They would generally scatter the money to different types of companies. Okay? And then they're going to buy a combination. It depends on the objective, a combination of stocks or bonds, or just maybe bonds alone, etc. Okay? Economies of scale. Now, when the investor will work via a mutual fund company, what happens is the cost of investing will be lower. Why? Because there are many investors and the mutual fund company will do all of the paperwork for them, all of the necessary actions for them. Easy access. There are mutual funds tied up to a bank, or you can simply talk to an agent. As low as 5,000 pesos, 10,000 pesos, you may invest already in a mutual fund. Okay? Some brokers, some agents, and even some banks, they offer mutual funds, or they are partners in partnership with mutual funds. Professional management. Okay, there is a management team with a fund manager and analyst working on your behalf, and a variety and choice. So depending on your objective, depende sa objective nyo. So you may select a fund with the objective of growth, with the objective of having value, or you want to put your money in order to be liquid, kumikita ng mas malaki kaysa sa bank interest, pero liquid pa rin. There are different choices for you. Okay? Last, you have the disadvantages. Transparency. No? Pwede nyong hanapin yung KIDS, KIIDS. Okay, I'll talk about that next time. So there is a document called a KIDS, KIIDS. Okay, that would show the information about the mutual fund. More on that next time. Disadvantages of mutual fund. So kung hindi ka sanay sa fluctuating returns, mutual funds are not for you. Especially those which are invested in common stocks. Okay? The returns are fluctuating. Cash drag. Ang mga mutual funds na yan, okay, yung mga mutual funds na yan, minsan, marami silang hinahawak na cash. Imbes na ilagay nila sa investment, hindi nila nagagawa. Dahil may mga investors na kumukuha agad ng investment nila. So they have to maintain some amount of cash. The portion of your money will not, all of them, a portion of your money will not go to the investments, but rather they would go to the cash balance in the balance sheet. Okay? Cost, yung pambayad ng fund manager, sometimes you have to question if it's worth it, especially kung hindi maganda yung performance ng fund. Diversification. Diversified ka nga, pangit naman yung mga companies na pinili. Okay? Sometimes diversification would lead to diversification. Okay? Mas lumalala dahil diversified ka. Okay? Then let's talk about fund management. As I have told you, sometimes the management is very questionable. Bakit kaya mataas yung binabayad sa kanila? Palugi naman yung pondo. Then finally, when evaluating funds, comparing one fund to another, it will be very difficult. Depending on what day you will start, kasi every day nagfa-fluctuate yung price, di ba? Yung NAV-PS. Okay? So I'm going to discuss more on the advantages and disadvantages. So for now, I would like to focus on your quiz 2. Tingnan nyo muna yung quiz 2 ninyo. Okay? So I'm going to give you, wait lang. Okay, let me start